Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to look at a concept that I've always enjoyed. Now, of course, it's not always going to work perfectly. It was a little bit more fun when you had Netflix and Apple prior to some of their big splits that you had years ago, but it is still something that's worth looking at. So one that I wanted to look at today was Facebook, because it had a very sharp correction, and it's interesting to look at because I don't know that it was the easiest thing to call when the squeeze was firing long, because generally I'm going to go with that momentum. But now that you've seen this pretty sharp correction that we had on Tuesday, you come back over and look at the open interest that you have here, and you'll start to notice that we have a pretty big chunk of open interest right here on the 180 calls. That suggests that we might see Facebook gravitate towards 180 to help bring the premium out of those and get them closer to expiring worthless. So depending on how you would like to structure the trade, one way to look at it is to understand the core part of the idea, especially if we were to gap down into 180. I would look to sell the 180 straddle and then buy protection. So if you wanted to do it as the outright short vertical, you absolutely could. In this case, you can add on $5 of worth of protection relatively inexpensively, and that brings in a good credit. So that's one spot to look at those. And then of course another favorite is coming over to take a look at Apple, and it's just applying the same type of logic. So you can look at this and say, you can see that here at 180 we had a pretty good chunk of open interest. On the put side it's a little bit lighter, which might be expected, but you're really just working off the idea that you could hang around 180. Now the last one that we can look at to complete the FAN lineup of some of these that I'm going to be looking to tomorrow, another is Netflix. Now Netflix may not have quite as much of a psychological value. 315 to me is not as good as 325 or maybe 300, but when you come back to your chart, you can see that Netflix has come back right down into the 8-day exponential. So for me, this would be a good area that would hold, and it's kind of working the idea of saying, I don't think we're going to exceed the highs, and I don't think we're going to fall below 300. Well, if that's the way you want to approach the trade, I think you can do the same thing by looking to sell what would be the at-the-money 315 short straddle, and then come in and buy about $15 worth of protection. You can always structure these a little bit different depending on how much risk you're trying to take on. This is about the point where I see a point of diminishing returns. So buying that about 15 wide, taking in an 835 credit, and then you're getting a little bit better than a 1-to-1 risk reward ratio. Try to take something like $3 out of that as we get into Friday, and I think those make for some good short-term trades. So I hope that helps. You guys have a great rest of your evening, and we'll see you at the next free video.